Hello, I'm Maurice and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video is entertainment purposes only. The stock we're going to talk about today will be NEO, ticker NIO. As you know, I haven't covered NEO for quite some time now. I've been focusing a lot of my time on covering the cryptocurrencies market as we're going through that cycle as we speak right now. So I want to come back to the equity market real quick, and with respect to Tesla and NEO, both of my very major part of my portfolio. I want to cover NEO specifically first because of the fact that NEO is currently up about 6.4% as we speak right now on this Tuesday morning. So congratulations to everybody that bought the dip, that we've been experiencing for the couple quarters so far. And seems like the reversal is also coming based on my previous video on the reversal play that we're expecting. So I'm going to go through a technical analysis to see, is this a good time for us to buy right now? What are the resistance levels you should be looking out for in case you are dollar cost averaging or try to build your position first time? Or what's the price target for you in 2021 as well? So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for NEO, ticker NIO. You can see that for NEO, currently we're trading around like the $41.30, up about 7% off the day so far. So definitely a very green day so far. So congratulations again for everybody that bought the dip so far. You can see that whole sell-off that we've had so far. And just to recap on a historical perspective, right, you can see that ever since last year, somewhere around like the August time frame was trading around like the $12. And due to the fact of the Q1, the Q3, Q4 boom that we had in the EV sector with respect to the S&P 500 inclusion for Tesla, with respect to the Biden administration proposal for the green energy, with respect to the Chinese government proposal on the EV evolutions going forward with the 2030 plan on basically transforming and transitioning from all the antiquated vehicles like the petrochemical vehicles, the diesel vehicles, the gas vehicles to EV vehicles going forward. So those type of vehicles are going to be obsolete going forward. All of the vehicles by 2030 is going to be electric vehicles going forward, from cars to buses to anything, right? And subsequent to that, because of those like positive media affectation that we've been percolating among with CNBC and multiple different news and newspaper and media publications, it drove the stock up all the way to the $67 mark, right? And you can see that how stretched out the MACD was, right? Basically, it was highly inflated because of just euphoria, and also with the momentum pump that we've had. That correlates to this extreme pump that we've had, right? Basically, quadrupling your money within like just a couple months, right? And ever since then, the balloon got pretty inflated at this point, right? And it was popped because of the Q1, Q2 dynamics that we've been experiencing on a macro perspective, right? Just to name a few, like the inflation scares that we've been getting, the chip shortage that we are expecting with respect to the delay on the demand and supply for EV vehicle productions, with respect to the tax adjustments that Biden has proposed for us, right? The corporate tax adjustment is going to go upward, and also the capital gains tax has also been adjusted upward for multiple states across the country in the US. And also on top of that, with respect to the Chinese tension that has with the US government so far. And also on top of that, with respect to just the inflation scares that we've been getting so far with the depreciation of the dollars, right? All of these media affectation, on top of that, I'll also miss one with respect to the sector rotations, that a lot of hedge funds are shifting the dollars, their portfolios from the growth stocks, which NEO is part of the growth stocks and tech stocks, to more of the recovery stocks, right? Like the AMC, like the Carnival Cruise, the Royal Caribbean, the Krogers of the world, those type of companies, the Walmarts of the world, that subsequently drove more of a reallocation play, that subsequently drove more of a selling pressure. And when one of the big giants decide to sell, then it scares off the whole market, which subsequently gave more of like a pop of the balloon type of effect that causes a lot of public investors to subsequently sell at the same time, which is exactly what you see in front of us right now, right? Selling down from the $67 mark all the way down to the $31 at one point on that March 08 crash that you see in front of us, right? Down all the way to the $31.89 level, right? And subsequent to that, we had that like small rebound, and I would call this like a dead cat bounce, because people thought that was the bottom, and you were right, that was the bottom, I would say, technically speaking. And also on top of that, the drop was relatively steep, knowing the fact that you could see the line was relatively stretched off down to this like very negative submerged level, right? You could see that we're way below the Earth crust at these levels on the RSI perspective, right? And that immediately got bought up, right? You could see that's why the V shape was so sharp that it bounced back up. However, with respect to the lack of development, with respect to the the macroeconomic factors that I've identified with respect to the chip shortage and some of the exogenous factors with respect to the foreign trade tension and the inflation scares, those type of catalysts haven't really been progressing at all so far. That subsequently drove more of a sell-off, right? And because of that, we just kind of have been hovering sideways, with those like monthly CPI report, that we've been getting some percolations around and some anticipation momentums around. But these CPI reports have been kind of subpar and also not that substantive with respect to like providing investors confidence into the long-term fundamentals of the stock, which subsequently drove more of a sell-off. And you could see that, you specifically see that the balloon popped again on April 27th, and we drop all the way back down to the bottom again, right? Which is basically testing this level that we've seen at the $31 level, which is what we see right here, right? And ever since then, because of the fact that the RSI has already dipped below again, right? You could see that we basically meeting where the March 8th was on May 13th, that it reversed back upward, right? And you could see that we've been breaking through the walls of the resistance level quite a couple of times now, right? You could see that we were trying to struggle around like the $35 mark, and we subsequently broke through that. So congratulations on that reversal. That was the first indicator of the reversal. And a secondary case of the reversal was the $39, $38, $96 mark, right? Which is a secondary resistance level, right? Breaking that $40 mark, basically. And again, any flat numbers are oftentimes a pretty tough wall to crack, or the pretty tough wall for you to break down. Okay, so that took us some time to obviously formulate to get to that momentum, and eventually it happened because of you could see that by that point, the MACD has already crossed upward, right? Like the two dragons, right? The yellow dragon is the MACD line, the blue dragon is the signal line, and the MACD is indicating is a bullish signals coming, which subsequently drove it up, right? And that's a good sign. And also on top of that, the RSI was already oversold, that it was just bound to be reversing upward, right? So now let's look at on the more of a near-term perspective, what I see going forward from here, right? I foresee, knowing the fact that we are kind of just testing up and away right now, we are testing this like more of pseudo resistance level that would form historically at the $42 level that would form historically. You can see that we're currently at that level right now. We also have seen this level once on April 29th. We're also seeing this level on basically on April 1st. We're also seeing that a couple of times historically on the March 24th. And also on top of that, we also saw that on March 09th. And a while ago, right? You could see that we also saw that on December 29th before that whole rally up. And then a bunch of times here, right? So we are at the very, very strong consolidation substantive level at the moment right now. Okay, so right now we need to really watch the level here, right? Because we basically broke through the walls now, and it was going to be pretty difficult for us to crack back down below the $40 mark right now. So I think the reversal is definitely confirmed. But I would wait for a little bit because today is a relatively green day, so I want to see more of the investor sentiment around like the appetite around these level. But just know that the $40 mark, the $41 mark is a very strong substantive resistance level. We tested at least 15 times in the past for the past 1 year so far. So if you were to dollar cost average, I would wait off a little bit today. I would wait because of the fact that there's a probability that we might reverse back down a little bit and retesting somewhere around like the low 40s, or like somewhere around like the low 39 again, because we do have some resistance level that we've formed, right? Specifically at the 39.09 level. So I think what I see going forward is that we're gonna maybe go back down a little bit to the 39 and then subsequently go back up, knowing the fact that RSI is already stretched out. We are highly overbought at the moment on a daily perspective, despite the MACDs crossing upward. But you could see that the fuse of the separations of the two crosses are relatively shallow right? So I foresee us to be the highest level that we will go to in the near term will be like the 42.30 at the moment, or if possible even like 43.23, but that's like a 50 cents dollar difference, right? That we will go up here, which we are kind of doing so right now at the moment as we speak. We'll go back down because we do have a gap that we need to form, right? And basically testing back at the 39.13 again, and then subsequently go back up, right? So I would weigh off, on buying this at these levels at the moment. We have had such amazing opportunities, in the past couple months and weeks so far for you to buy it. So I wouldn't chase the green because it's pumping. I would wait and think logically based on the levels that we should be buying at the psychological level, right? So again, so just to recap on all the numbers, right? First level to buy in would be the 39.19. If we crash down for some, I don't know, exogenous reason with respect to like more negative affectations around the media, around the chip shortage, or something around like negative CPI report that we can be getting in the next 15 days, or some anticipation around like a further worsening of the inflation scare that we'll be getting, we might even go back down to the $35.62 level, which is another level of resistance level that we're getting to. Do I foresee us to be going back down to 30? I would say that's highly unlikely by this point right now, because of the fact that that would just not be logical, right? It wouldn't occur that fast, right? It will go through. It needs to go through the normal course of supply and demand cadence, and it needs to go through the psychological sediment test, which we are learning right now, from investors to gain their appetite on around like testing these levels. And once we get confirmation around those activities, then we know for sure what are the new bottoms that were formed here, right? And based on what we see right now, I think the new bottoms is basically at the $40 mark right here, which is again, right, a strong resistance level that would form about 15 times historically. So I feel pretty good if you would think about this like as a long-term investment opportunity, holding it for 1 to 2 3 years out, buying at this level, you probably make like 2 3 extra money or even 5 extra money from here. But knowing the fact that you just need to go through the economical cycle, you need to be patient about this game, and ultimately you win the game eventually, because just a macro economical shift and how the evolution is going to be propelling going forward. So just a matter of time right now. But right now it needs to go through the cycle. It needs to go through public adoptions, and it needs to go through this like psychological, momentum cycle in order for us to gain acceptance both on Wall Street but also from public investors at the same time. All right, so moving on to just to recap on all the numbers that we just talked about today. Despite today being a very green day for NEO, up about 7.5% as we speak right now. I think with respect to the how the chart is set up right now on both a supply and demand dynamics and also in the investor psychological perspective, the $40 is really truly a bottom resistance level that would form substantially historically about 15 times, like I mentioned, based on the chart is set up, right? So that's definitely a lot of good investment appetites around this level. However, because of the fact that RSI is highly overstretched up right now, and the MACD line, the crossing is relatively shallow, that I wouldn't advise buying on a pump today. I would advise on waiting off on the sideline, wait for a dip going back to like around like the lower 40s or like 39.50, which I've identified here for you as a first level of fair level of entry price point for you to get into. And if we break down even more, then secondary resistance level with the $35.50 level, which we have tested basically the last 1 quarter, right? Couple months, like at least 4 months historically, right? Ever since that sell off from the $67 mark, right? But I think we probably have missed the bus already because of the fact that the Neo train or Neo bus it seems like it's reversing right now. And for us to go back there, at least in the near term, or you talk about like next week, is highly unlikely because it just needs to go through the normal course of psychological occurrence, that normal cadence for us to go back down to these levels, and especially not this sharply, right? And if we even get down to the Black Swan events, something crazy happened, like William Lee decide to resign, or I don't know, shut down its operations in China or something crazy like that, we might even get down to like this $31.50 level. But how likely is that gonna happen? That's pretty, you know, not the most logical thing to say, right? So I think, and also on top of that, the chart doesn't. It's just it would make no sense in a supply and demand like dynamics in terms of like a logic perspective as well. So 3150, I give that maybe a 1% likelihood of us getting so, but I just give it here as a steal level. If we do get there, I'm probably gonna liquidate some of my Bitcoin and Ethereum just to get to these levels, because that will be just a amazing black swan events that will occur, right? And if we to buying at this like $39-50 level right now, again, right, I wouldn't advise buying it today. Around these level, you subsequently get a price target of $85 level, contingent on the right trend going forward, and based on my discounted cash flow analysis that I've done, I think 1 year out with respect to the production and the ramp up that we're going to be getting going forward, $85 level with 115% of an upside, 2.2 times your money buying at these entry level, is very conservative, and I would say exceeding this $85 mark, to maybe 105 per share wouldn't be surprising to me at all. And I think we are seeing a reversal. We just need to be patient about this reversal and be thoughtful about our dollar cost averaging play and further build a position from here for long-term gains going forward. Alright, so that's it for today with respect to my technical analysis on NEO, ticker NIO. Really appreciate you guys for dropping by again. I hope you guys get some clarity and transparencies around the the dynamics of the play that we're talking about today. And please hit the like button, subscribe button, also the bell notification. And please look out for my next video coming up. Take care. Bye.